Now, you see these things like this where it drops down. We're going to see that as a continuation pattern, retail. And I told you, watch this low. Okay, if it trades below that, it might fail. Why? Because it spent so much time in that gap right there. That's logic that you don't find in other books. Nobody's teaching that stuff. Nobody's teaching that. I mean, I am, but it takes authorship to know those types of things. And we couldn't even touch that. That's bullish. I told you it would run into this. Look how fast we did it. We opened here on this candlestick, traded down to the low end of that, and couldn't even touch the low. What's this candlestick's high right here? Okay, watch this candlestick's high. 509 half. Okay, 509 half. This candlestick's low, 10. So 2 ticks. Couldn't touch the low of it. Watch and see if it wants to do it here. In a perfect world, if it wants this right here for the lunch macro, taking that buy side there, it won't lay a body down in the lower half. It can, because there's a small little inefficiency right here. You see that? That's why this is okay. But if this wasn't a gap here, I would want to only see it trade into the upper half. Wick in the lower half, that's fine, but not lay a body down. But because this inefficiency is here, it can trade to its consequent encroachment of that and then leave a small portion of this gap here. Well, let me show you. Not enough to know, show me how to get into a trade that works. You have to know what is indicating that the market's not likely to deliver specifically. You have to have protocols and processes and things that are, they're defensive mechanisms. Everybody has the gas pedal in their car when it comes to trading. Everybody knows how to floor it. You know how to over leverage. You've wrecked enough accounts to prove that. You know what it feels like to get in there and chase a run because you're afraid you're going to miss it because you don't know what you're doing. Okay. You're looking in the rear view mirror and you're trading with the rear view mirror instead of looking ahead and saying, okay, I'm coming up to this area here at this intersection. I'm going to turn right. As soon as I get there, I'm turning right because the market's going to go this direction. 99% of you are looking in the rear view mirror and saying, wow, prices already did this. So I guess I better go long. And what I'm teaching you is how to interpret price action right now, live, and the barriers and where you need to have a detour. Because sometimes the pothole forms right when you went over top of it. And now what do? That's the reality of market trading in real time with real risks. You have to weigh all that stuff out. Down here, when we were looking at that low, this is a potential hazard. It's a hazard. So anticipating a price run below that low when we're so deep in a discount from the first candlestick at 9:30, you have so many things against you in and of itself by itself. Then it's Friday, and it's been one-sided from an opening bell at 9:30, and then we start seeing fair value gaps here form. There's benefit in knowing when they're not doing what you think they should do.